Welcome to the Business Finance Bulletin, episode 134. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services. In this bulletin, why businesses fail, how small businesses are feeling unloved by their banks, and the forthcoming launch of a new peer-to-peer lending site. Let's start this week's bulletin with a rather depressing question. Why is it that businesses fail? Well, that's a question that's been asked by the insolvency trade body R3. They went out to their members who were insolvency practitioners and asked them, why is it that businesses fail? What are the common reasons? Well, perhaps not surprisingly, the most common reason why businesses fail is as a result of late payment, with the insolvency practitioners saying that 23% of the cases they deal with are purely down to late payment, where businesses have not been paid for goods or services already supplied. And of course that has a domino effect within a business, with a business not being able to pay their own suppliers, not being able to pay wages, and it results in the business closing down. The next reason, with 20% of corporate failures being down to this, is customer failure, with a customer that you've supplied to has gone into insolvency itself and so not been able to pay the money owed to you. So those are really common reasons why, and all round late payment. Well, who's probably the most common person who does this, or the sector that does this? Construction companies. 57% of insolvency practitioners said that the construction sector are the worst. Well, perhaps not surprisingly, because they are notorious for late payment on both sides, and so it's not a surprise that they come out on top. Of course, what can you do? Well, one of the first things you need to do, of course, is to remember that when you're extending credit to any of your customers, you are essentially becoming a bank, and therefore you should do similar due diligence that banks would do. The key thing to do is go and carry out a credit search just to find out how financially strong they are. And of course, as I said in many bulletins before, have systems and processes in place to make sure that late payment doesn't drag on and put your business at risk. As we know, since the onset of the credit crunch in 2007-2008, the relationship between small businesses and banks has been strained at best. Now, whilst there's some evidence that banks are starting to lend again to small businesses, that relationship is still under stress. And that's the findings have been carried out by a new survey undertaken by YouGov and Nucleus Commercial Finance. And they found out of the 500 small businesses they surveyed, 26% of them said they feel that they don't get any support by their banks. They're feeling a little bit unloved. But the prevalence of that lack of support, or feeling of lack of support, is really amongst the small business sector, those businesses turning over less than £1 million. And in that bracket, 30% of businesses said they felt unsupported. The key issue, of course, is lack of bank managers. There aren't the bank managers out there that there used to be. And so that one-on-one relationship where you've got somebody who really understands your business is lacking. And I have to say that's one thing that we kind of concentrate on here at Business Loan Services. The way we explain to our clients is that we become the replacement bank manager. And that's what you need. Trusted advisors on board who can actually guide you through the whole finance raising process to replace that bank manager who's not there. So if you are feeling a little bit unloved and you're looking for some finance support, just drop us a line, info@businessloanservices.co.uk, or visit our website at businessloanservices.co.uk, and we'll see what we can do to help make sure that you get the access to finance that you need. Let's move on now to news of a new crowdfunding stroke peer-to-peer lender which will be launching in autumn 2016. Called Peer Funding, and it's just obtained its full permission from the Financial Conduct Authority and said will be launching shortly. They're going to be offering a range of financial products aimed at the small business market. So they'll be looking to offer business loans, both secured and unsecured, selective invoice discounting, whereby you can take one particular invoice and discount it and get the money for 30 to 120 days, depending on the terms of the invoice. They'll also be doing bridging loans and property development finance as well. So a good addition to the crowdfunding and peer-to-peer lending space. Now, if you're an investor in peer-to-peer loans. They're currently running an early bird offer as I record this, with a special deal for the first 150 investors who get on board. So that'll be a good investor base if you're a small business looking to borrow money from them when they formally launch. So if you want to know more and to keep an eye on their progress, just go along to their website, which is peerfunding.co.uk. Well, that's it for this bulletin. I hope you enjoyed it, and if you did, please don't forget to give it a like and a share. If you're watching on the video version, don't forget you can also get the podcast version available on iTunes, Stitcher and SoundCloud. Just go along to those channels and search for Business Finance Bulletin. And if you're on the podcast version, just pop along to my YouTube channel, go to YouTube and search for Rob Warlow, and there you will find this episode and all past episodes and other videos in this series looking at raising finance and providing you with general finance raising tips. So thanks very much for being with me. Look forward to being with you in the next bulletin. Have a great, successful and profitable week. Bye bye now.